All right, let's move on to the stock market. Sentiment Trader showed that for the first time in 15 years, 60% of the indicators we track are showing an excess amount of optimism and excess of excess, as he says. And you know what? I'm feeling it. Like every stock that I own is just going vertical. It
feels bizarre. Like you feel like money on the table and playing with house money. I should take like that. That's the feeling you get from this.
Right now, I'm feeling a little internally. My giddy signals are flashing. It feels way too easy. Everything is going up. Can you time my giddiness? No, but it sure feels like the market should like chill out.
Okay,
or maybe we're just getting started. I don't know, but it feels too easy right now.
The highest I looked today on the Robert Shiller CAPE ratio historical graph, the highest ever we've had is 44.2 times for the CAPE ratio, which is in the dot-com bubble. Right now we're at 33.1 times. I think there's a world in which we could approach that 40-ish number. I think it's possible. I'm not saying it's going to happen. If rates stay low, inflation doesn't get completely out of control, I think we could. And maybe the other side of it is, well,
wait, in the Biden administration or the Trump Jr. administration? What's our time frame?
I think in the Biden administration, we could see.
Whoa! I will take the other side.
That's not that much more of a jump.
Yes, it is. 33 to 42.
Maybe the other side of that is if we do see a huge post-vaccine boom, that the earnings play catch up too, and it's harder from that perspective. But I think if rates stay low, I'm saying speculation-wise, we could see something that approaches .com levels. I'm not ruling it off the table.
Speaking of hard, Niall Bayer tweeted yesterday, Pfizer is literally about to save the world. Their stock is up 11% year to date.
That's pretty bizarre.
Etsy is literally about to ship you a custom anklet. Their stock is up 254% year to date. Investing is hard is a takeaway. All right, let's get into this Jason Zweig CMT story. So Jason is a writer at the Wall Street Journal. He wrote a post about how he opened up a Robinhood account and he traded his butt off like I did. By the way, I think I said this a few weeks ago. I moved my account off Robinhood and onto Schwab because I'm using it like it's like a dating app for no reason. I had not a ton of money on there, but I was just checking it 40 times a day. It is addictive.
Okay, here's the alternative for me, who uses it as a small piece of my portfolio. Having that release just allows me to forget everything else. So checking Robinhood all the time means I never check any of my other holdings. Right? I'm using it as that's the offset.
So you're in the minority, at least. So they said most of its customers use a buy and hold strategy. Come on. I mean,
Jason reached out to them and they said 98% of people on Robinhood aren't day traders.
I mean, you're certainly a buy and hold investor, but come on, I don't buy that for a second.
Up the average, just like my credit score.
I'm not saying that everybody on Robinhood is a junkie. 98% of them aren't traders or aren't day traders.
Fortune had a story, and they broke down average daily trades by Robinhood, Schwab, TD Ameritrade, and E-Trade, which are the biggest competitors to Robinhood, obviously. They have about 2.5 times as many average daily trades as Schwab. It's not that much. It's actually only about 25% higher than TD Ameritrade, and then they're about 4 times higher than E-Trade.
I would love to see the median. But whatever. But the average is 4.3 times? Come on.
It's higher, for sure.
Wait, average daily trades. Is that per? Yeah, per customer, right?
I don't know how they broke this out, but yeah, but it's just showing that how much higher it is than their competitors, for sure. They've learned how to turn gamification of investing into a fun thing to do, and it's easy. And
so the New York Times had an article, "This is insanity. Startups end year in a deal frenzy." In the article, I think this is from, is it CSB? Is that the name of it? CSB Insights? They said startups have raised 223 mega rounds of $100 million or higher so far this year, on a pace to surpass last year's total, according to PitchBook, from PitchBook. So let me ask you this. Are we just indestructible?
Remember those 2 weeks in March, though, when we thought that all startups were going to fail and just
run out of cash?
Yeah, just going to the incentive. I mean, there's a few weeks there where, but
are we indestructible?
If you're betting against the U.S. economy and the U.S. consumer right now, good luck, I guess. It's hard to, I don't know.
I know it's ridiculous to be so bravado, but
okay. So the hard part about this cycle,
but what ends this?
It always happens. Excess.
Yeah.
There's too much, and it just. But again, trying to tell where that pendulum swing is going to stop. Good luck. So here's the question: like, when do you sell? You have a bunch of stocks that are up, and they seem to be going up every day. So when do you sell? Because on the one hand, well, no one ever went broke taking a profit. On the other hand, a lot of companies just never come back. So they had this story in Barron's.
Well, when do I sell my shares of Snowflake? I've got 4 whole shares.
Is it as expensive as Amazon now? I don't know. So
actually, I was just talking with Josh about this. Snowflake, if Snowflake grows at an 100% annualized rate over the next 3 quarters, right? That's an if, which it can, but that's not a gimme by any stretch of the imagination. But let's just assume that it does. At today's valuation, it'll be trading at like 120 times sales. And Zoom, for example, is at like 60, and that's insane. CrowdStrike and the Trade Desk are at like 45, I think. At the peak in the dot-com bubble, Amazon was like 42.
Okay.
So maybe this is what stops it. It's just people are just going out of their minds paying whatever for these companies.
Right, and they just don't care. And eventually there's no one else to pick it up and pass the baton to. So there was this study from University of Chicago, Carnegie Mellon, MIT, and they looked at more than 4 million trades in 800 institutional portfolios from 2000 to 2016. And these are portfolios that are like $600 million. So, and this is nonprofit, so there's no taxes to think about here in terms. They found while there is clear evidence of skill in buying, selling decisions underperform substantially, even relative to random selling strategies. And they said returns were particularly bad for extreme performers. So really good stocks or really bad stocks went on to underperform. Which, honestly, this makes sense to me that this is the hardest part of investing. Because you could be one of the persons who made 100% in Amazon in the early 90s and got out and left tens of thousands of percentage points on the table.
There's millions of people that sold Apple for 30% gain and thought they were geniuses.
Yes, or alternatively,
I would have.
If
I didn't short Amazon and I bought it, I would have sold it after a 30% gain.
Or you held on to GE that's in the midst of an 80% drawdown from all-time highs. So
right.
There's both sides of that where you think, I'm not going to sell this thing that is going to go on to give amazing gains, or I'm going to hold on to this thing and it's going to come back. You just wait and see, and it never does. That's why selling is so hard.
I don't think that there's very many intelligent things you could say about when to sell. I don't. Sorry.
That's the problem. Buying is the easy part. Selling or holding is really difficult because there is no like.
But I don't
green
even
or red
think,
light.
I don't think you could teach somebody when's a good time to sell. Who knows?
Right.
You could see the future.
Name one good investing book about when to sell. There isn't one, right?
Right.
I don't think there is. About when is the best time to sell a good stock. I don't know.
So, I get the risk management side of things, but so let's say you sell Amazon after every 15% drawdown and then you get back in. I mean, that you can't do it because all the best stocks get killed along the way.
My holding
period.
So
are you going to sell before they get killed and then buy again? That's not realistic.
My holding period is forever or until there's a pandemic that causes me to sell my airlines. Is that fair?
Are you subtweeting?
All right. So we've talked about this How America Saves report from Vanguard that they put out every year. They just did a new one called How America Invests, and they looked at their 5 million retail investors to figure out how do they manage their money. It's kind of funny.
So you say this is like the other end of the spectrum. You've got Robinhood over here, Vanguard over here. In the same way that Robinhood users are probably not representative of how America invests, I don't think Vanguard's users are either because these are probably the best behaved investors in the world. And, as a group.
Okay, but here's the other thing. The amount of money Vanguard has dwarfs the amount of money the average Robinhood person has.
That's of course a fact.
So, but I think you can point to the fact that Vanguard has gained so much money that investor behavior on average is improving, and they're bringing up the average.
Yeah, for sure. But this report should be titled "How the Best Investors Behave" or whatever.
Probably, and I think you could make the case. Vanguard long-term buy and hold investors and rebalance are probably in the top 10% of best investors of the last 20, 30 years.
5
what? 5%?
Yeah.
I think it's possible. So they said, it's kind of funny. We always joke that no one actually holds a 60-40 portfolio. The average Vanguard portfolio is 63% equities and 16% bonds, 21% cash. So it's basically 60-40.
I have my 529s are at Vanguard. I don't have a personal account there. Do you?
I have a SEP IRA there that I use with a just 4-fund index fund portfolio. But the crazy thing to me here is that the average of 21% in cash for these portfolios, that's huge. That's surprising to me.
So counterpoint, maybe these aren't the best behaved investors. Maybe these aren't the top 5%. I wonder, I would love to see that cash position over time. Because I bet you that doesn't fluctuate as much as you would think. I feel like that's probably fairly steady.
So you don't think that's higher because interest rates are so low everywhere else?
No, I don't think so. I don't think it's a function of interest rates. I think that, and I don't even think that it changes that much with the market, because we know that Vanguard investors, by and large, do not time the market, even when the market's getting killed.
Yeah.
They rebalance.
And they are very, very diversified. So they said only 16% of houses hold no equities, 22% hold 98% or more, meaning just about all stocks. So Vanguard is a pretty well diversified set of investors, and it says they only trade only fewer than 1/4 of households trade in a given year, and those that do typically only trade twice. So these are probably people that are rebalancing their portfolios.
So Vanguard investors trade twice a year. Robinhood investors trade 4 times a day.
Right.
But 98% of them are buy and hold. Yeah, okay.
So Robinhood is setting the price for Vanguard investors who are making all the money.
Exactly.